Volta surges over 8% following their Q4 FY24 updates. The company registers a significant volume growth of 72% in air conditioning sales during the quarter, the highest for any Indian brand.
Bandhan Bank dips 6% after the Managing Director and CEO Chandrasekhar Ghosh also announces his retirement effective from the 9th of July. Speaking exclusively to CNBC-TV18, Ghosh added that he would take up a strategic role in the holdco. Brokerages issue cautious calls.
Info Edge climbed 7% after the quarterly business update saw standalone billing rise 10.5% over year. Brokerage firm Nomura maintains a buy call on the stock, citing possible bottoming of the IT hiring.
A couple of other positive business updates that came in. Godrej Consumer up nearly 3.5%. The company's reported volume growth in high single digits on an organic basis. Inorganic included means double-digit volume growth. The margins too continue to expand year on year. Nykaa too is higher, up almost 3% following a good fourth quarter business update where fashion and beauty and personal care net sales value grew a little over 20% year on year.
Indus Towers climbs 3% on the back of Vodafone Idea's fundraise. Brokerage firm CLSA also upgrades the stock and sets the target price at 335 rupees a share. Hello and welcome to Chartbusters. We kickstart a new week on a high with the Nifty up close to around 108 points. Earlier today, we went ahead and made a fresh 52-week high, fresh life high, in fact. So things looking quite good, Manglam.
Things looking quite good, Nigel. The question is whether it sustains here or not. The Nifty Bank is conspicuous by its absence in today's trading session after doing extremely well in all of last week. Very close to a record high in the Nifty Bank as well. Let's see where that goes. And the Nifty, the range, of course, has moved higher by about 50 to 100 points. So that is good news for them. But let's talk about the auto space then. Manish Raj Singhania was the president of the Federation of Auto Dealers Association, FADA as we know it, joining in to give us their outlook on how FY25 pans out for the auto space. Thanks a lot, Manish, for joining in. Overall retail sales were up just about 3.14% in the month of March. If you look at all of last year, CVs were up just 5%, whereas three-wheelers were up nearly 50%. What's your outlook on both of these verticals for FY25?
So, for commercial vehicle segment, it has been a steady recovery and good recovery. As post-COVID and economic upturn, things have been improving with government spend on infra and a lot of other projects. The CV has been seeing a continuous uptick around. On a short-term basis, I think the election would be slightly a bit damper for the CV market, where government spend kind of tapers down. But post-election and post-monsoon, with the establishment of a stable government in the center and with the increased spend in infrastructure project and other layout works, the CV market is expecting an increased economic activity. CV market looks positive for overall FY25. For the three-wheeler market, it has been a total turnaround. It has migrated totally to the EV vehicles and it is driving sales over there. The migration of laborers back to hometowns and ever-expanding urban landscape and ever-expanding cities have further add value to the three-wheeler market, and it will continue to foster growth in the coming financial year.
Okay, all right. Hi, Manish. Good morning and good to see you in. What about passenger vehicles? There's a bit of a dip as well, sir, on the monthly sales that we have out there. What's the outlook on that front?
So I won't count it as a dip because if you recollect, Navratras last year were in the month of March. But now all the festive occasions are coming in the month of April. Dealers are having ample bookings and good lineup of vehicles for the festive season. Whatever loss kind of we see in the month of March will definitely cover up in the month of April. Plus, this overall year also we are seeing a lot of new model launches, a shift towards a lot of excitement on electric vehicle space also. So I think a lot of laid down for the consumer. The discounts and schemes are increasing for the consumer, and we can see a slight traction in the entry-level market also. So a lot of things happening over there in the PV. On a long-term basis, I think though we are on a very high note, high figure, the PV market will still continue to grow on a single-digit basis for overall year.
Single-digit basis for the overall year. Just wanted your thoughts on two things. One, the SUV market share is up 50% or has crossed 50% in the last financial year. At what rate is that likely to grow versus the growth of the passenger vehicle space itself? And in that itself, what kind of SUVs? Is it going to be small entry level or is it going to be premium, which is likely to grow? Could you give us a sense of your prognosis here for FY25?
The government has defined SUV in a very different way. I think that market still hovers around 20%, what we call a true blood SUV. But multi OEMs kind of brand their products in their own way. So that according to them, now it's 50%. I think the excitement and the most of the launches that are forecasted for the coming year, I think 70-80% launches are still planned in SUV segment. So the excitement will continue in the SUV segment. SUV sales will definitely contribute further with better road infrastructure, accessibility, and plus family outings coming out. And people like kind of, every OEM is kind of marketing the road trip very well. So the excitement is building around the road trip, family trip, and the increasing comfort in overall drivability of the vehicle. Now, it's on your screen, everything is available. So it's a kind of, digital car that you're driving. So everything adds value to your comfort and drivability. The excitement will continue to build on SUV, and I think overall in coming year we do have we have space to grow in SUV to 55-60%.
It's always a pleasure hearing your view out, Mr. Singhania. Thanks a lot for joining in and filling us in with your analysis on how you see the trend shape up. And as you said, there could be a bit of a blip ahead of elections, but post that, you're expecting things to recover. Well, a good time to move to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us to talk about a stock that he's tracking closely. Jitendra, take it away.
Hi, thanks. We like Ion Exchange, a water treatment and environmental solution provider with over 50 years of experience. It is capitalizing on a strong investment cycle in the sector. Despite, if you see recent run-up in share prices, it is trading at attractive levels, quoting at around 20 times its fiscal 26 estimated earnings. Our view is backed by improving earnings visibility, strong existing orders, and of course robust project pipeline of around 9,000 crore. The company's business is performing well with almost a 17% year-on-year growth in revenue in first 9 months of the fiscal 24. Profitability is also improving with the EBITDA margins up by 40 basis points to 11.1% in this period. As I said, a strong order book of around 3,300 crore and improving execution provides a very good earnings visibility for the next few years. Additionally, if you look at in their chemical business, the resin facility expansion is near completion, which will double its capacity and contribute to higher sales. It has recently acquired MPRL, which is expected to add another 80 crore to its revenue and further contribute in the future. The company has guided to achieve 20% annual revenue growth in fiscal 25. So overall, Ion Exchange is well positioned for growth, and thus we believe stock provides a very good opportunity.
Right, with that, we'll slip into a short break. On the other side, we'll have the management of Signature Global join in. Rajat Kathuria, who's the CEO, joins in to discuss the company's quarterly update, which has beat their earlier estimates. The overall pre-sales for this year has crossed 7,000 crores. Well, we just spoke to the Federation of the Auto Dealers Association, and as we speak, the stocks of this morning have to be the auto stocks. Eicher Motors thumping away up almost 2.5% at the high point. M&M doing well. Tractors in particular, along with CVs, did not do very well last year. But the belief that SUVs are likely to do better is taking some of these stocks higher. Passenger vehicles for M&M have been important growth drivers. Maruti continues to do well, and Bajaj Auto too is at the high point of trade. But we do have the management of Signature Global with us today. They saw strong sales growth in the fourth quarter. Pre-sales grew over 240%. volumes over 111% as well. Rajat Kathuria, who's the CEO, joins in now. Rajat, thank you for joining in. And I mean, it's not a big surprise, this jump, because you had earlier, made the street aware of the fact that there was one new launch in the fourth quarter, and as a result of which you were likely to do a minimum of 3,600 crores in pre-sales in the fourth quarter, and upped your FY24 guidance from 4,500 crores to a little over 7,000 crores as well. The question is, the fourth quarter, how much of the increase was largely due to the new launch, and as a result of which, what's the expectation for FY25?
Yeah, hi Mangalam. Thanks a lot for calling us to your show. Yeah, we were anticipating a very strong response on this launch because we saw that sort of demand coming from the market. The market continues to stay supply constrained, and that's why this was quite a awaited launch from the market. So we have achieved almost 7,300 odd crores for the last fiscal year. If you look at the last 3 to 4 years, between FY21 to 24, our sales CAGR has crossed, almost 60%. So it's been a very consistent, updrive in the pre-sales numbers. We will be very comfortable giving another 25 to 30%, sales growth for the coming fiscal year from these levels.
Okay, all right. Well, Rajat, good on you. I recall that interview when you said more than 7,000 crores is gettable, and you've delivered 7,300. You're saying on that base, 25% plus is doable. Good going on that front. Well, you also said, that the net debt could increase due to land acquisition. Could you tell us what is the updated debt number, and by how much does it go up?
So, see, if you look at it on a YOY basis, see our net debt numbers up about 100 odd crores. It stands at close to about 1,100 odd crores as of 31st March 2024. But what has really happened during the year is that we've acquired almost 15 to 16 million square foot of area in land, developable space on the southern peripheral road in Gurgaon. This is a very prime region, and the GMV potential of this land would be anywhere between 25 to 30,000 crores. Despite all this acquisition which has happened and which will propel our growth in multiple years, going forward, our debt has remained static. Needless to say that a lot of free operating surplus and the proceeds which we generated from public listing went into acquisition by and large during the current financial year.
Okay, so 1,100 crores is a ballpark number in terms of debt, right?
1,100 odd crores is the ballpark.
And the first half of the year, you spent around 300 crores on land acquisition. For the second half, how much did you spend?
Those exact numbers are being worked out, but yes, I think it would be significantly higher.
What is significantly higher? I mean, would it be closer to 1,000 crores? Would it be 500 crores? Just trying to understand.
No,
you said that.
That will probably cross 1,000 crores, is what I can say.
Much more than 1,000 crores, or will it be between 1,000 and 1,500?
It will be between 1,000 and 1,500.
All right, we'll take 1,250 as the number then for a ballpark calculation. I mean, if you could give us a sense of the launch pipeline in FY25. I mean, did something move from FY24, get delayed into FY25? What's the kind of launch pipeline that you have?
So launch pipeline is very robust for the current financial year. We plan to come up with launches on a consistent basis. The first launch is going to be in Sector 71, a group housing project. You could say a little bigger than the previous project, which we launched in Sector 37D, which was on the Dwarka Expressway. Overall, during the year, I think there are a few launches which are planned, and they should comfortably have a potential in excess of 15,000 odd crores. So I could say that we'll be consistently launching projects through this current financial year.
Okay, the stock market as well as your customers will be wondering, what is Rajat going to do on pricing? Price increases have been quite steep, right? But as you're saying, demand is quite strong. Where do prices head from here? Is there further headroom?
As an industry and not as Signature, if I speak, see the market is still not getting as much supply as it should. That's one factor which could potentially drive up prices. If you ask us as a company, we will prefer only an inflationary linked sort of an increase and not like a steep rise. But my expectation is that prices are still on the up.
Prices are still on the up. In fact, they've gone up 45 to 50% over the last 2 years. How much higher can they go from here, according to you?
See, a couple of factors. You can't look at prices in isolation. There's a lot of infrastructure development which has happened, in Gurgaon specifically. So earlier, last month, the Prime Minister finally, flagged off the Dwarka Expressway. That's a massive and that's a very marquee sort of, infrastructure development which has happened. Likewise, we saw Sona elevated corridor happening last year, and the Delhi-Mumbai industrial corridor starting right from, the point where, Sona begins. So there's been, a lot of infrastructure upgrade in which the city has seen. And prices, if you look at it on a, not on the last 2-year basis, but on a last decade basis, you'll not see that the prices have really gone up beyond an inflation number. But it's just that, last 7-8 years between 2012 to about, the pandemic time, there was literally zero movement on price. And it has happened just over the last 2 years that, the sense is that prices have really run up. But I think it's prudent to see it on a more long-term historical basis.
You said that you acquired 15 to 16 million square feet developable area in the southern part of Gurgaon, which could give you a GMV of close to 25 to 30,000 crores. Roughly that, basis your numbers, some calculations suggest that it could give you realizations of almost 25,000 per square feet. Would that be a fair assessment, or do you think it grows beyond that as well?
I am in these computations. No, I'm assuming pricing of anywhere between 16 to 17,000 rupees a square foot. But yes, I think that market currently is trading higher. So we are giving numbers basis like a very achievable price without considering escalations, over times to come.
Okay, your average sales number, I think for the past year was around 12,000 rupees, right?
Last September, we would have given a guidance of about 14,000 odd rupees a foot, which I'm currently counting it to be around 16,000 rupees a foot. So it's 10-12% higher than what we would have assumed 6 months ago.
And quarterly, your pre-sales could jump structurally higher to say 1,500-1,600 crores over the 1,100-1,200 crores that you would do earlier?
No, I think pre-sales will see a jump over the coming quarters because with these new launches, the launch sizes are quite quite significant. So we expect good pre-sales on a quarterly basis during this particular financial year.
Over 2,000 crores
Last
is possible.
year, for the first 3 quarters, we were largely selling the inventory which was launched in the previous years. And last quarter, we launched a new project and hence saw a surge in pre-sales. Vis-a-vis that, in the current year, we'll be consistently launching new projects, during the initial part of the year. So we will see better, quarterly pre-sales performance.
25 to 30% growth over 7,300 crores would amount to roughly 2,000 to 2,300 crores in quarterly pre-sales as well. So we'll keep that number. Finally, before we let you go, collections have crossed the guided mark. What we need to know is the operational cash flow. Last year, your operating cash flow was down by about 280 crores. This is FY23 that I'm talking about. FY24, what is that number likely to be?
So see, we typically use operating surplus as a benchmark. It's about 35%. So let's say if we've collected 3,100 odd crores, the operating surplus would be between 1,000 to 1,100 odd crores. The final numbers are yet being worked out. But that's like the benchmark which we've seen has played out in the previous years. This operating surplus is before any distribution to the stakeholders or land acquisitions. So just operating surplus is usually around 35% of collections. So it would be around 1,000 to 1,100 odd crores of operating surplus, which we envisage for the current year.
All right, Rajat, wishing you all the best for the coming year. You're sounding fairly optimistic on prospects. Last year has been good. We look forward to chat with you all through this fiscal as well.
Likewise. Thank you very much.
Well, for the time being, though, we'll have to slip into that short break with news that the markets are holding strong. These automakers are flying away as we speak. Large names like Mahindra and Mahindra as well as Maruti, both of them at the high point of the day. Slip into a short break, come back, continue focus on the markets. Welcome back. Well, just keep an eye on the broader markets. SCI Land and Assets. So the stock has been all over the place. Today it was down close to 5%. Now it's moved into the green. So SCI Land should come up for you on the screen. Big up move is what we're seeing on that one. Indus Stars, you had a brokerage upgrade coming in from CLSA. Plus, if Vodafone survives, then it's good news for them. They get their outstanding dues as well. So that explains why actually that stock, you pull up a year-to-date chart of Indus Stars. It's been a big mover. Instead of playing Vodafone Idea, you could have played a safer bet than Indus Stars, presuming that you expect Vodafone to survive. And in the last 12 months, the stock has more than doubled. On the flip side, you have IRDA. That's moved to the low point of the day. Now that's down close to around 2.5%. So keep an eye out on that one.
Nigel, I'm looking at Senco Gold from the broader markets as well, because Kalyan Jewellers reported their fourth quarter update. 38% jump in their revenue is what they saw in the fourth quarter. Then in the India revenue, that is. Titan reported their numbers as well. Titan also saw near 19% growth in their jewelry revenue. The short point is that these smaller players, because they are growing faster on a smaller base and increasing their stock footprint faster than Titan as well, on a percentage level, they are also growing faster than Titan. And of course, there is that argument of a valuation gap between Titan and all the others. And in that, Senco seems to be a bit of a beneficiary. Taking note of the updates coming in from Kalyan as well as Titan, Senco Gold too has moved to the high point with a gain of almost 5%. So we'll await some updates coming in from Senco Gold in a couple of days as well.
Okay, all right. Well, that's about all the top movers. Then for the time being, though, we'll just wrap up on this edition of Chartbusters with news that the Nifty is up close to around 110 points odd. You have the Nifty Bank as well. That's now moved into the green. So good recovery is what we have seen. But Mangalam, before we wrap up, we've got a programming note.
We do have a programming note. In fact, an announcement to share with all of you all. We're launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth. Be it insurance, tax saving, managing your portfolio, retirement planning. There's so much to learn and lots to do. Whether you're in your 20s, 30s, or even 40s, this live webinar is for you. There are limited seats, so don't miss this chance. Register now. Scan the QR code, which you see on your screen, or alternatively, log on to cnbc-tv18.com. We'll see you on the 11th May.